Quantum computing is not just a buzzword reserved for physicists in labs, it is slowly becoming a force that could reshape the way money moves around the globe. Imagine a world where calculations that once took banks weeks to process are solved in seconds. That speed and efficiency would not just change Wall Street. It could ripple into every savings account, investment portfolio, and retirement plan. When finance meets quantum processing, the rules of the game are rewritten. Finance today is already complex, with trillions of dollars exchanged daily through intricate networks of institutions and algorithms. Yet, even the fastest supercomputers struggle with the sheer number of variables in global markets. Quantum computing thrives in complexity, capable of analyzing countless scenarios simultaneously. That ability means risk management could evolve into a science of near certainty, allowing firms to anticipate market shifts with sharper precision. Think about your investments, your 401k, your savings. Traditional finance relies on approximations, models that are only as good as the data fed into them. Quantum computing has the potential to chew through data not just faster but in new ways, spotting connections that classical systems overlook. For the individual investor, this could mean access to insights once reserved for billion-dollar hedge funds. It democratizes intelligence in finance. Banks spend billions annually on fraud detection, cybersecurity, and transaction monitoring. Even so, breaches occur and fraudsters slip through. Quantum processing can transform this landscape. With its capacity to test enormous possibilities at once, it could enhance encryption, detect anomalies instantly, and safeguard accounts in ways that traditional systems cannot. Your digital wallet, your online transactions, your identity itself could be shielded with quantum-grade security. Now picture trading floors where algorithms race to outpace each other. In that battle, milliseconds make millions. Quantum-enhanced trading strategies would not simply react faster, they would predict and simulate outcomes beyond classical reach. For traders and investors, this new horizon could redefine competition. The winners of tomorrow may not be those with the biggest data sets, but those with the smartest quantum tools. Personal finance could also take on a new dimension. Imagine financial planning apps powered by quantum backends. These apps could simulate countless life scenarios instantly, providing tailor-made strategies for your retirement, your mortgage, or even your weekly budget. Decisions that once felt overwhelming could become clear through quantum-optimized pathways. One of the most exciting implications is in portfolio optimization. Right now, balancing risk and reward across multiple assets is a math-heavy challenge. Quantum computers could evaluate billions of possible combinations at once, finding investment strategies that maximize growth while minimizing risk in ways humans and classical machines cannot. The average investor might soon access a level of strategy once thought impossible. Risk in finance is often misunderstood. It is not just about avoiding loss. It is about calculating probabilities in an unpredictable world. Quantum computing thrives in probability spaces. It can model uncertainty with elegance, turning risk into something not feared but harnessed. Banks and individuals alike could use quantum tools to make braver, smarter financial choices. For global finance, quantum computing could be a stabilizer. Market crashes often result from complex, cascading failures that traditional models cannot predict in time. Quantum simulations could anticipate those domino effects, potentially preventing disasters before they unfold. The future of finance might be less about surviving crises and more about averting them entirely. In lending, credit scoring could take a quantum leap. Current systems often penalize people unfairly due to incomplete or outdated data. A quantum system could integrate far more variables in real time, painting a truer picture of creditworthiness. This shift could empower more people to access loans, start businesses, and grow wealth. Insurance companies operate on prediction, calculating the likelihood of events from health risks to natural disasters. Quantum-enhanced models could revolutionize this sector, making premiums more accurate and policies more personalized. In the long run, insurance could become not just a safety net, but a proactive partner in managing risk. Monetary policy itself might evolve with quantum assistance. Central banks face the Herculean task of steering economies with incomplete data and imperfect models. With quantum computing, policymakers could simulate the effects of interest rate changes, inflation adjustments, or stimulus packages with unprecedented accuracy, leading to more stable economies. In cryptocurrencies and blockchain, quantum computing presents both challenges and opportunities. On one hand, it could break existing cryptographic codes, threatening the foundations of digital currencies. On the other, it could also create stronger, quantum-resistant forms of encryption, ushering in a new generation of secure financial technologies. Consider the global supply chain, a backbone of modern finance. It involves countless moving parts, from factories to ports to retailers. Disruptions in one region can ripple worldwide. Quantum computers can model these networks with remarkable depth, helping businesses anticipate shortages, price shifts, and logistical challenges before they happen. Financial literacy itself could rise when paired with quantum-driven insights. Imagine interactive platforms that teach individuals about budgeting or investing by simulating real-world scenarios in real time. Learning would no longer be theoretical, but experiential, empowering people with tools to see the ripple effects of their financial decisions instantly. The ethics of quantum finance also deserve attention. If only a handful of institutions control these powerful systems, inequality could deepen. Wealthy entities might manipulate markets with insights unattainable to others. To counter this, society must encourage open research and broad access, ensuring that quantum finance becomes a tool for many, not a weapon for few. Your retirement savings, for instance, could one day be managed not by a financial advisor using conventional models, but by a quantum system capable of navigating decades of market uncertainty. The level of personalization could reach a point where your investments respond dynamically to global events, adjusting automatically in your favor. For entrepreneurs, access to quantum-powered financial models could lower barriers to entry. Startups could run simulations to test business strategies under countless economic conditions before committing capital. This foresight could drastically reduce failure rates, unleashing new waves of innovation across industries. In asset management, the phrase "diversify your portfolio" could take on a whole new meaning. Quantum algorithms could analyze correlations among assets with incredible depth, revealing hidden risks and unexpected opportunities. Investors would not just spread risk, they could strategically allocate funds in ways that optimize resilience and growth. Even philanthropy could change. Charitable organizations often face challenges in distributing funds efficiently. Quantum optimization could ensure donations reach the most impactful causes, maximizing social return on investment. Money would not only grow, it could serve humanity more effectively. On the consumer side, everyday banking might feel different. Loan approvals could be nearly instantaneous, fraud alerts more precise, and interest rates personalized in real time. What feels bureaucratic today could become seamless, freeing individuals to focus on goals instead of paperwork. Stock markets could become more transparent as quantum simulations expose hidden manipulations and unfair advantages. Regulators could harness these tools to ensure fairness, protecting investors large and small. Transparency builds trust, and trust fuels growth. At the macro level, quantum finance could help solve one of humanity's toughest puzzles: economic inequality. By modeling wealth distribution, taxation strategies, and policy outcomes with extreme precision, governments could design smarter interventions that close gaps without stifling innovation. Education in finance might undergo a transformation. Universities could merge quantum computing into business and finance curriculums, training a new generation of professionals who are fluent in both money and mathematics. This fusion of disciplines could create leaders capable of steering society into a quantum economy. Stickmin is the Mize character of this story. The excitement is not just theoretical. Tech giants and financial institutions are already investing heavily in quantum research. We are in the early innings of a revolution that could take decades to mature, but its trajectory is clear. Money and quantum computing are converging, and the results will reshape our lives. Of course, every revolution brings uncertainty. Will quantum finance create stability or chaos? Will it empower individuals or concentrate power? The answers depend on how we, as a society, choose to govern and distribute access to this technology. Responsibility must guide innovation. Still, the potential benefits are too great to ignore. Faster, fairer, safer financial systems could liberate people from fear and uncertainty. A quantum-powered economy could fuel growth not just for nations, but for families, communities, and future generations. Ultimately, quantum computing meeting your money is not about replacing human judgment, but enhancing it. By providing deeper insights, stronger security, and faster solutions, it empowers people to make better choices. The story of finance has always been about trust and progress. Quantum computing is simply the next chapter, and it is one worth writing together.